Hi, and welcome again to another edition of Market Analysis. Today is February the 2nd, 2023. I'm Giovanni Bencourt, analyst, trader, and educator with Vantage Markets. All right, well, the European Central Bank increased its key interest rate by 0.5 percent points, diverging from the Federal Reserve, and signaled it will raise rates by another half percentage point if in March, as resilient economic growth in the Eurozone and a rapid reopening of China's economy are expected to keep inflation high. The ECB's move, its fifth large rate increase in a row, takes its key rate to 2.5%, the highest level since 2008. That is still some way below those of the Fed, which rates to 4.5 to 4.75% yesterday, and the Bank of England, which it increased its rates to 4% earlier today. Oil prices have turned lower and continue a slide that began after data showed a large build in U.S. stockpiles. Brent crude oil is down 0.5% at $82.40 a barrel, and WTI is down about 0.3% at around $76 a barrel. Now, we're monitoring the impact of impending sanctions on Russia's energy exports due to coming to force Sunday, and that should bring some obviously more momentum, more demand of it next Monday. So we'll see perhaps the crude oil, barreling down, and then from here, from that moment, this is where it closes on tomorrow. We could probably find crude oil prices higher on Monday. So that being said, stock futures have climbed after the Federal Reserve further slowed its pace of interest rate increases. It reinforced investors' hopes that the central bank could begin cutting rates this year. Now, futures tied to the S&P 500 gain about 0.5% today, while those tied to the Nasdaq jumped 1.5%. Now, the Fed on Wednesday lifted its benchmark federal rates rate by a quarter percentage point, its smallest increase since it kicked off an aggressive monetary tightening campaign last March. That sent stock indices climb and the U.S. government bonds yield fall, along with the dollar dropping to its lowest level since May. Now, the market's big comeback in January is indicative of one thing. Investors don't believe the Federal Reserve is going to keep interest rates high for long. Stock bond prices have jumped to start the year, particularly risky assets have run up even faster. Strong momentum in the labor market is not having much of an impact on gold as prices hold near fresh 9 month highs. The U.S. Labor Department said that weekly jobless claims fell by 3,000 to 183,000, down from the previous week's unrevised estimate of 186,000 claims. The latest labor market data beat expectations. According to consensus forecasts, economists were expecting to see jobless claims rise at a faster rate of pace to 196,000. The latest economic data is not having much impact on precious metals as gold market is seeing solid bullish momentum following the Fed Reserve monetary policy decision. So let's take a look at what the markets could be doing today. Well, we're going to be opening in a few minutes. To the upside, I am placing my resistance on this high of September the 13th of last year, right around almost the 1299.50 marker, or 13,000 shy of it. Will we reach it today? Perhaps, or will we have basically some profit taking on the markets today? That could also be another scenario. I have my support at 12,400, okay, which is more almost this previous high. So let's see if that will be the case. But yeah, momentum to the upside is the way that market seems to be going. So on the S&P, I'm having that 4100 as my support, and I am using this previous high of August 22nd as my resistance. Will we come towards it? It looks likely. It looks very likely. So we are favoring longs on the indices as the same token goes for the Dow. Now, will we see Dow come over to the 34,500 market and reach today? That could be seen. That could be seen. As far as crude oil goes, $76 is the marker so far. Support. I have mine at 74.50, but we could already have found some footing here, and perhaps the market will begin to move higher. As far as the Nat Gas goes, yeah, Nat Gas is holding that 250. It comes towards it, but it quickly retraces from there. So I'm seeing that natural gas could probably just linger around this 260 marker, and then gold prices are just really staying strong above 1940 so far. I have 1925 as my support, 1980 as my resistance, and silver has really has break is looking to break out of this consolidation stage. This really look at all of this noise is is really looking to break out of it. Now this gap up is showing that momentum. So will we see $25 by tomorrow? Perhaps, most likely. So I'm favoring longs on silver, on gold, on copper as well. The 21-day moving average is trading below the market, so that's acting as a dynamic support. I have 435, which is that high of January the 18th of this year. Then we have Bitcoin, which is also looking to push higher. Right now is set up to do a breakout to the upside. 2450 is my resistance. And then we have the euro that did trade it above 110 briefly with the news of the ECB today. It has looked to trade below 109, but will we reach that momentum and continue to the upside? That most likely will be the case. As far as the pound goes, the 21-day moving average has acted as a nice support. The market has bounced off it. 124 is my resistance, my psychological resistance. But yeah, I have 124.50 as that resistance that has been marking the pace for obviously the euro, for the gold, for the pound. I'm sorry. And then we have the dollar index that has broken that 101, trading into the 100s, and that 100 marker psychological support level is very strong. So keep an eye on that, because if we happen to break that 100 support on the dollar index, we'll see a nice pop on gold, on silver, on copper. Okay, so keep that in mind. All right, that's it for me for today. Have a fantastic trading day. I'll see you tomorrow.